Welcome all. Today we are having our respected Professor Sanjeev Thakur sir, who is a chartered accountant by profession, and I am Riya Arora from Anand Engineering College, BBA second year. I am fortunate to have an interview with our head of our department. So the topic for our interview is tips for tax savings for individuals. So can you please explain?
Thank you, Riya. On the request of various of our students, we have decided to launch one talk show, that is the Out of the Box. So the topic of today's discussion is, as per the request of many of our students and other colleagues and friends, is the tax saving tips for the individuals. Basically, everyone wants to save tax. Tax saving, on the one hand, government wants tax to run the country, to manage or administer the different activities, and no one wants to pay tax. Paying tax is a pain for everyone, but for the national interest, we all have to pay legitimate tax, proper tax, timely tax, and we all have to do all the compliances related with the tax. So with this session or with this show, we have come with the provisions related with the deductions available for individuals. So there are so many deductions available. Generally, people do not know how to take benefit of those deductions. All the deductions are covered under Chapter 6A of Income Tax Act, and Section 80C to 80U are devoted specifically for the deductions. So we'll cover all the deductions in summarized manner, which are available to individuals only. Basically, what happens, these deductions are provided from the gross total income. Gross total income is an aggregation of 5 heads of income. First is income from salary, second is income from house property, third is profit and gains from business and profession, fourth is income from capital gain, and fifth is income from other source. So the aggregation of all these 5 heads is known as the gross total income, and all these deductions are provided from the gross total income. These deductions cannot exceed the GTI. So it is a restriction up to the amount of GTI. That means, suppose a person's or individual's GTI is 10 lakh, then he may get deductions maximum up to 10 lakh, not more than that. So let us cover all the deductions in summarized manner. The very first deduction is given under Section 80C. It is available to individual as well as HUF, means Hindu undivided family. The maximum amount is 1,50,000. It is available for some expenditures and some investments. Some expenditures, like if you pay tuition fees for your children, then the amount of deduction is available up to 1,50,000. The education, this education is restricted up to maximum of 2 children, and education must be provided for full-time course, and that is also in India. If you purchase a house and you repay, you take a loan and then you repay that EMI of your housing loan, then you get a deduction on the principal amount, repayment of principal amount. Interest is also covered. Interest amount is covered under Section 24B. That is the maximum limit is 2 lakh. So you may get deduction for your interest component out of EMI under Section 24B up to maximum of 2 lakh rupees, and here you can take benefit of principal amount of your EMI, that is maximum amount is 1,50,000. That is the whole cap, upper cap of Section 80C. Similarly, if you purchase a house and you get registry and you pay stamp duty, then also you can get deduction for this. There are some investments are also covered, like if you take insurance policy, then you get a deduction for the repayment of the payment of premium, insurance premium. If you invest in PPF, Public Provident Fund, if you take NSC, then there are so many. If you invest in Sukanya Samriddhi account, there are so many types of investments which are also covered under Section 80C. Maximum cap is 1,50,000. Thereafter comes Section 80T, that is related with the health insurance premium. So if you pay health insurance premium on the life of the SSC himself, on the life of his or her spouse, on the life of dependent children and the parents. So the amount is 25,000 for himself, his spouse and children. and 25,000 additional for the health of parents. If parents are senior citizen, then this 25,000 will become 50,000. If the SSC himself is a senior citizen, then this amount will become 50,000. So maximum deduction is 50,000 for on the health of parents and 50,000 on the health of the SSC and spouse and children. 50,000, so 1 lakh, and minimum deduction is actual amount paid. Thereafter, in this 80D, one thing is important, that is you can take a benefit of up to maximum of 5,000 rupees on preventive health checkup. That means if you go in a lab and get your preventive health checkup and pay amount, then 5,000 rupees is available as a deduction. And this amount you may pay in cash also. Otherwise, all the payments of 80D you are required to make other than any mode other than the cash. And after 80D, the next section is 80DD. DD is related with dependent disabled. If any family is having any dependent disabled, dependent means the children, brother and sister, parent, spouse. So if an SSC is having such type of dependent disabled, then the deduction is 75,000 for the normal disability and 1,25,000 for the severe disability. And amount of actual expenditure is not required. Even if you incur 10 rupees, then also you will get 75,000 or 1,25,000. So actual amount, this is a flat deduction without any condition, like actual expenditure. Next comes 80DDP. This is related with the specified disease. If anyone incurs medical expenditure on specified disease, then for a normal citizen, maximum amount is 40,000. And for senior citizen, maximum amount of deduction is 1 lakh rupees. That is available. And in this case, these specified disease, if any person gets insurance premium or insurance claim, then this amount will be reduced from this deduction. After DDP, next deduction is 80E. 80E is related with the education loan. You may remember also 80E is related with the education. And 80DDB, you may remember like Dil Dehla Dele Wali Bimari, 80DDB. 80DD, you may remember like dependent disabled. So like this, you may remember those deductions. 80E is related with the repayment of interest on the loan taken for higher education. So if anyone starts repayment of loan and pays the interest, then up to 8 continuous years. That means 8 years starts from the year in which the SSC starts paying the interest. Then who can take this? Now the question arises, who can take this loan? So SSC himself, his spouse or his children. Even if he is a legal guardian of any person, then also if he takes loan on for his purpose, education purpose, then also he may claim a deduction. After 80E, the next section is 80G. 80G is related with the donations. There are several types of donations. Basically, there are 4 categories of donation. First category is 100% donation is allowed without any limit. In second category, 50% of donation is allowed without any limit. Third is 100% deduction with upper cap, that is 10% of GTI. And fourth is 50% of donation, and the upper cap is also there, that is up to 10% of GTI. So what are the question arises, what are the or what type of donations are covered in different funds? So category A covers donations related with the national importance, like Prime Minister Relief Fund, Chief Minister Relief Fund, like defense welfare funds, like National Cultural Fund, like these type of funds are covered. Under category B, the four funds are covered. One is Jawaharlal Nehru Foundation, Indira Gandhi Foundation, Rajiv Gandhi Foundation, and National Drought Relief Fund. Under category C, 2 types of funds are covered, or donations you may give. One is related with the family planning expenditure, and second is donation to the Olympia Association. Fourth category is related with the charitable organizations, the religious organizations, medical institutions. So you may give donation to them. The important thing is this, under section 80G, you have to pay donation in cash or through bank account. That means donation in kind is not allowed. You will not get benefit of donation if you get if you pay give donation in kind. And more importantly, if you donate for more than any amount which is more than 2,000 rupees, then that amount must be in any mode other than cash.
Otherwise, we will not be able to claim that.
Yes, yes, yes. If you give a donation in cash and the amount exceeds 2,000 rupees, then you will not be able to get these type of deductions for donation under section 80G. After 80G, the next section comes as 80 QQB. QQB is related with the royalty on the copyright. If you write any book of scientific nature or literary nature, then you get the royalty. Then the maximum amount is 3 lakh rupees. In the same line, another section is QQR. That section also provides deduction for the royalty on the patents. If you have developed any patent, then you get royalty on that patent. Then the maximum deduction is 3 lakh rupees. In this series, next deduction is under section 80 TTA. TTA is related with the interest on saving bank account. So if you have opened a saving bank account and you get interest in that saving bank account, that is taxable under other source, income from other source. And deduction is available, it is allowed up to 10,000 rupees. So interest is exempt up to 10,000 rupees. You can claim deduction. And section 80 TTB, that is available for the senior citizens. So senior citizen means a person who has attained age of 60 at any point of time during the previous year. So he will be able to get 50,000 rupees as reduction under section TTB. And FDs are also covered. Under section TTA, only the saving bank interest is covered. Here the interest on FD is also covered. And the last section for individual is 80U. Under section 80U, the amount of deduction is same as 80DD. That is 75,000 for the normal disability and 1,25,000 for the specific or severe disability. And here the SSC himself claims. Section 80U is related with the if SSC himself is disabled, whereas 80DD is related with when his dependent is disabled. So they all are the deduction. So one SSC can claim benefits of all these deductions and reduce his tax liability.
Thank you so much, sir, for such an informative session.
Okay. Thank you, Ria.